Farhan. So Nick is the CEO at Jewel Bank. Gabriel is the head of crypto assets and digital assets AML transaction monitoring at RBC. And Farhan is with us from Mastercard. He is the VP of digital asset security for the North American region of Mastercard. I'm gonna ask all of the speakers to maybe give a quick 1-minute introduction of yourselves, what they're doing, and maybe how they got into the space. So let's start with Nick.
Great. Thank you, Kunal, and good morning, everyone. My name is Nick Lapetsos. I am the CEO of Jewel Bank. We used to say Jewel, but we were just recently, within the last 2 months, issued our banking license, our full banking license out of Bermuda. And we're very honored and appreciative of the fact that Bermuda had the confidence and trust in us as bankers to be able to create a new bank to service digital asset companies primarily, well, from our Bermuda location, but primarily from other parts of the world other than onshore here in the US. And we're looking forward to relationships that we already have and some that we'll develop with folks that I saw on your list of members in the Blockchain Association in Canada. So great to be here with you and happy to answer any questions that you might have about banking digital asset companies and what that looks like worldwide. So thank you.
Amazing. Thanks so much, Nick. Farhan, do you want to go next?
Sure. Hi, my name is Farhan Memon, and I'm with Mastercard. I am in the North American group leading crypto asset security. And primarily that involves 3 main areas. One is we purchased a company last year called CipherTrace that does blockchain analytics. So helping Mastercard merge CipherTrace into our existing operations. Secondly, we're taking data from CipherTrace and combining it with Mastercard's own data to create new crypto analytics products. And so I'm responsible for the launch and go-to-market for that in North America. And generally being an evangelist for crypto, both inside Mastercard as well as externally and participating in forums like this. I've been involved in crypto for several years, being a buyer of Bitcoin and Ethereum. And I've also worked on creating my own coin project on the side. And so turning a passion and a hobby into something professional is really gratifying. And thank you for having me here this afternoon.
Amazing. Love that, Farhan. Want to know more about your personal project as well, but we'll take that next time. Gabriel.
Right. Thank you for that. My name is Gabriel. I lead AML transactions monitoring at Royal Bank of Canada. Previously, I had the product of crypto assets and digital assets as well with the bank, although we're not public in terms of what specific offerings we're looking into. I can shed some light into how the bank thinks about crypto assets and digital assets. Prior to heading crypto and digital assets at the bank, I like Farhan, I also had my own entrepreneurial hobbies and endeavors on the side that was related to crypto, be that investing, venture building, and whatnot. So I'm happy to be here and share some insights and learn from my colleagues as well. Thank you.
Amazing. Thanks so much for that, everyone. So really, the format of today's discussion is, it's a pretty open discussion. And for the audience as well, if you have any questions, please feel free to send them over in the chat. We have left 15 minutes towards the end of the discussion to take those questions, as many as we can. But let's dive right into it. So maybe I start with Nick. So Jewel Bank is, it's one of the early adopters banks in the space. And you're serving all of the digital asset companies globally. And you're providing multi-currency services, all of the fiat on and off ramps, providing lending, you're providing custody, you're dealing with stable coins, you're dealing with settlement network for institutions. There's a lot of stuff that you're doing. Can you shed some light on why Jewel decided to pursue this opportunity and what kind of you've learned along the way?
Sure. So I'll give you a little bit of background. The founder of our company, Chance Barnett, and I were working about 4 years ago here in the United States, and we were working on an initiative to bring a licensed bank here in the US to bear to be able to act as a issuer of fully reserved, fully redeemable stable coins. And I think back in 2017, 2018 timeframe, we were a little bit early when it came to the regulatory environment. They told us we were a little early for their taste. And we were also told by the capital markets at that point, because the regulators weren't really responding in the way that we had hoped. The capital markets told us that we were a little early. So Chance, I came on board a little bit later, but Chance immediately went to Bermuda and found a very receptive jurisdiction. So Bermuda had just passed some laws to not only bring digital asset companies into Bermuda, hoping to build an economic base based upon the digital asset industry, but they realized that in order to do that, they really needed a bank that was going to be singularly focused on servicing those companies. As we all know, in the digital asset space, we're coming out of this era a little bit, but there has been an era in the recent past where if your company's name started with block or with bit, as we say, you were almost prohibited right off the bat from getting a banking account. And we thought from the very beginning that that was unfair, because we think that a vast majority of companies and a vast majority of transactions that are on chain are legitimate transactions and are servicing the needs of public needs and so forth, of companies around the world. So we really felt like there was a disconnect between how the banking business, how the banking industry was treating digital asset companies, and the opportunity that we saw to maybe chart a different path. We have a couple of fairly large competitors that most people know here in the United States, in Silvergate and Signature, that have captured a lot of that business. And I think, as you mentioned, the products that you mentioned we're bringing to bear, primarily fiat on-ramps, deposit accounts for companies that otherwise might not be able to get them in the digital asset space. We're doing that primarily because Bermuda has something in this. Bermuda wants to see us service companies that might be able to establish some sort of an office or some sort of an operation in Bermuda for employment and economic activity. So really, that's our goal. I should correct one thing. We are not going to be in the custody business. We don't have the engineering on staff right now to build a custody solution, so we will outsource that. But our primary products are going to be providing the transaction accounts and the connections to the payment systems around the world that will assist on-ramp, cash on-ramp, and off-ramps. And then also what we're referring to as Joule Settle, which is a settlement network. We will be in the stablecoin business. We are going to be launching a stablecoin that will essentially power the state of the settlement network, which will be, think of that as being a closed loop environment for our bank customers to be able to settle with one another, very similar to what the other banks around the world have done. So we look at this as a huge opportunity, because we look at this as being a tremendously underserved market, primarily because of AML concerns that have always been there for this marketplace. I think if we look back in history, over the last 10, 12, 13 years, I guess, since digital assets have been in the marketplace, there have been companies that probably have not placed a priority on AML, let's just say it that way, early on. And I think that has created a challenge for them to get banking accounts around the world. That has changed. I think most big players in the marketplace right now understand the importance of doing proper KYC, KYB, and due diligence on the front end for their customers. So we really think we're on the front end, as we all are on this call, of really an evolution of what digital assets are going to be in the world, and kind of demystifying giving folks bank accounts is what we're here to do. So I'm not sure if I answered all of your questions, but that's a little bit more about a background for what Joule plans to do.
That's very helpful. So if there was, let's say, sounds like you mentioned the regulatory clarity that you had in Bahamas was the reason why you've been able to set up operations there, and then that's kind of enabling you to serve companies globally, not just within the jurisdiction.
Yeah, that's right. Sorry if I misspoke. Obviously, it was Bermuda. I'm not sure if I misspoke.
Oh, sorry, Bermuda. Yeah.
Yeah, and so what Bermuda has given us the ability to do is to service clients around the world from our hub in Bermuda. Now, that doesn't completely absolve us from the laws that we have to follow with our correspondent banking relationships in the US, because those travel with those banking relationships, but it also allows us to set up separate and distinct other banking relationships around the world that may be a little more well-defined and a little bit more reasonable in terms of how companies can get bank accounts and move money around the world. So yes, but we're focusing most of our efforts, although we do have a correspondent bank in the US coming online, we're focusing more of our efforts on what the digital asset space is going to bring to us from the rest of the world.
Very cool. Very cool. So maybe for Gabriel and Farhan, like, what do you think are the major opportunities when it comes to banking the various crypto asset businesses, and even like offering crypto asset products and services? Let's start with me, Farhan.
Sure. Well, when I think of major opportunities, I like to take a step back and see what people are doing. And of course, due to the blockchain technology being a distributed ledger, people can actually view and see that we're moving funds from banks and then shifting money to exchanges and to other virtual asset service providers. Now, obviously, there's a hurdle to get over. For new people entering this space, it's familiarity. And because I work in crypto, my family sees me as the crypto expert, for better or for worse. And it's not unusual for me to get a call asking me about a specific exchange or whether or not it's safe to transfer funds to that exchange. So I really think that the opportunity that exists for banks is to be that vendor of crypto assets to the general public, because of course the bank is a trusted institution. It's been a trusted institution for hundreds of years. And now what the bank has to do is be able to incorporate the same types of processes and mechanisms that it's applied to the general fiat world, to the crypto world. And from a Mastercard perspective, we see ourselves as helping our customers, namely the banks, being able to do that, as well as other players in the ecosystem like government or even FinTech and VASPs themselves.
Very cool. Go for it, Gabriel.
Yeah, so I'd second what Farhan said when it comes to knowledge and know-how, specifically when it comes to banks. So banks are quite valuable in the crypto ecosystem when it comes to the brand, the scale, the customer, and the trust. Particularly here in Canada, the challenge with banks is they're regulated and they're in the business of risk and rewards, and that will be from one bank to another, it's going to be, how far is their risk appetite going to be, right? And risk appetite is a function of how much they know about the asset class, right? And, if you go, for anyone in the audience who work in a bank, if you ask any of your banking colleagues what blockchain is and what Bitcoin is, you'll probably get, a dozen responses, some of which may be right, some might be tangentially right. But there's not a uniform understanding in banking. So, for every financial institution that has entered the space, hurdle number one has always been education, right? So what is blockchain? What is crypto? What is digital assets? That's the first step. The second step is persuading them that this is worth investing their time on, right? So it's education and persuasion. And when you get to persuade them, that's when risk policies, AML policies, cyber capabilities kick in, right? So because again, banks are in the business of managing risks. So when the risks are defined, then that's when all these opportunities that we can think of that fintechs are trying to fill the vacuum on, such as creating platforms, raising capital, having an asset management platform for trading crypto products, custody, private key management, all these things come into play after your education, your persuasion, and the policy updates have happened. But that, from a banking perspective, those are the three opportunities, if the banks were to overcome them, would enable crypto to become more mainstream.
Yeah, I absolutely agree. I think education is the first core milestone that needs to be achieved before figuring out what opportunities and products and services should be offered. So I think from both your takes, I know both your takes were more along the lines of if banks were to start offering products and services, crypto products and services. What about banks starting to offer services to crypto asset businesses? So what are the opportunities there for the bank themselves? Because the industry is booming. We know it's here to stay. It's going to just continue to grow. There are risks, but the infrastructure has matured quite a bit from where it was, let's say 4 years ago, 5 years ago. So where does the bank even see this as an opportunity as a new sector and embracing this crypto asset space as a new sector for their business?
No, for sure. I mean, and this is going to be argumentative, and each bank will have its own position. But fundamentally, custody is the basic, the most fundamental service that banks today, in a business-to-business environment, should have a presence on when it comes to having a foothold in the crypto space. and custody is, it's private key management. Any form of crypto offering, be it, Bitcoin rewards or trading platform, or having a Bitcoin exposure fund, right? So it would have an element of, what do we do once we have custody of the asset? How do we take care of it, right? And that's when the education part really kicks in. How do we, like, here's an asset class that has ledgers and pseudonymous addresses. That's so different from a fixed income bank, right? That's so different from an equities class. And when you look at personnel in banking operations, these are folks who've been around for most of their lives, right? They've been doing what they've been doing for the past 3-4 decades, and they've never seen a crypto asset on their ledger, in the 80s and in the 90s, a new asset class. They don't know how to treat it, right? And so having that basic understanding of what a custody is and how it works in the crypto asset space would, I'd say in my own point of view, would open the floodgates for banks to at least have a share in the market. So,
yeah,
I think that there's really, 3 distinct areas in which banks need to decide where they want to play, as it were. The first area is in sort of B2B. What services are they going to be offering as a bank to other businesses, right? The second is going to be in, let's call it B2C. What banks or what services are banks going to offer directly to their depositor base, whether it's a commercial or consumer retail depositor base. And then the third area I think banks need to look at is what are they going to allow their depositors to do with their own money as it intersects with the crypto economy. So speaking about the last part first, we see obviously a lot of retail interest in crypto. Billions of dollars have moved from Canadian banks as well as US banks into exchanges and other crypto assets like NFTs. And then we see, some banks having a very liberal policy towards crypto. They'll allow customers to use their debit cards or their credit cards or ACH to move that money. And some banks are very, very restrictive in that policy. They may not allow any crypto at all. They may only allow it on debit. People's own money may not offer credit use of buying crypto. And so, that's sort of one area in which, perhaps as Gabriel said, each bank is going to make its own decision related to how they perceive the risk. Mastercard's helping, banks do that in terms of, looking at all the VASPs that are out there in the world, identifying who they are and how they interact with their crypto activity on-chain or off-chain, whether they intersect with risky wallets or wallets that are sanctioned. And so it provides more certainty and trust within the ecosystem, both for banks and for consumers. As we move over into the bank's B2B services, I think there again, trust is paramount. 2 crypto bros and a website show up at the bank's doorstep. And how does the bank know, who these guys are or who the gals are? And so once again, I think having services like the ones that we offer through CipherTrace help to identify crypto companies and to identify the risk associated with them. And so that, once again, provides a foundation for banks to take the type of steps that Gabriel was talking about.
Farhan, I love how you kind of classified these three into like 3 different categories. So focusing on the B2B aspect, and we know there are services out there such as CipherTrace that allow banks to make informed decisions about any particular virtual asset service provider out there. Even though we have these products out there, still we're seeing a lot of banks not kind of accepting these virtual asset VASPs as their clients. So maybe we start with Nick from you. What are the biggest impediment to like embracing crypto companies by banks? Like, what was that you had to overcome? Was it compliance? Was it reputation? Was it any complexity? How do companies, VASPs, become more equipped to be able to get bank accounts and banking services from the existing players?
Sure. So let me just explain this. First of all, Jewel and other banks like Jewel are a little bit different because our entire business model is based upon us developing products and services and controls, risk controls, as Gabriel pointed out, around the inherent risks that digital asset companies bring to us. In our case, Bermuda wants that out of us. They've issued us a license so that we will, because we have the expertise to be able to get our arms around that risk. I think there's a broader macro picture here that everybody should probably understand as well, though. When it comes to, and maybe it's just a factor of size, but when it comes to larger banks or maybe more well-established banks having some real reluctance or allergies, as I say, to dealing with digital asset companies, a lot of it simply is just, they have entrenched business models with very large balance sheets. And one of the things that bankers do when they run large companies, and I've helped to run large companies before, is you really don't want to accept risk that's going to have the regulators in your office, jumping down your throat a little bit when the business coming in the door is not going to move the needle from a revenue or balance sheet perspective. So I think you have this, or have had for a long time, this thought of, if you walked into the chairman of one of the large banks in New York and said, I have a great idea, we're going to try to bank all these digital asset companies maybe 3 or 4 years ago. And yeah, there's some risks that might get us in trouble with our regulators. And yeah, they might, knock on your door a few times. You're going to be summarily dismissed by that CEO or that chairman, because he's going to say, we are not taking on the risk of digital asset companies if it's going to mean that you threaten the rest of our franchise that's so immensely profitable. So I think, to answer your question in some regard, digital asset companies are going to be forced, I think, or at least hopefully they'll find a receptive bank out there. They're going to be forced to look at institutions like Jewel and others that are specifically set up to handle their needs, rather than going to some of the big banks who don't look at their revenue source as being a needle mover, and yet look at the possibility of bringing on a pretty significant amount of regulatory risk, especially here in the US. We have a bigger problem with that, just kind of with some upheaval in the regulatory treatment of digital assets. Bankers get very nervous about that. So I think this is just a little bit of inertia from the big banks. Big banks have big balance sheets that make them a lot of money, and they don't want to put any of that at risk to kind of support a nascent industry, which digital assets still is.
That's a great point, Nick. Being able to move the needle in the balance sheet for the big banks. Gabriel, what are your thoughts? Like, what are some of the challenges that you've seen and you've experienced for banks in general to be able to accept crypto companies, just from a B2B standpoint?
Yeah, everything that Nick said resonates with me. The one entity that bankers fear are the regulators. They're not going to do anything until regulations are clear, right? That's not just one for one bank, but for all the banks, they wouldn't do anything until regulations are clear. And so there's 3 areas there's 3 key elements for banks to adopt anything new, not just crypto, but even say like a cannabis business, for example, anything novel, right? So one would be, what's the regulation saying about this? That's the first instinct. Second would be, how does that align with our policies? And third is, what's the risk and reward scenario, right? And again, and that's where, the innovator's dilemma comes in. Let's say the regulator is clear. Let's say the policies can be updated, and usually they're not, right? It takes a while to update them. Third is, am I willing to invest a certain amount of time and effort, both from a research and technological standpoint, to explore a high risk asset and risk my other businesses, right? Especially if you're constrained for resources, or you got any risk limitations in there. And can I do that, right? And complicate that with the fact that banks are very hierarchical, right? They're hierarchical, and some say it's a bit of a dinosaur when it comes to culture. It's command and control. So you really have to have that culture of forward thinking. Like I know there are banks that want to be future compatible. It's a tone from the top. So it's tone from the top. Is their leadership embracing visionary? Are they thinking of not just the cash cows of today, but 5 years from now, 10 years from now, 20 years from now? right? So all those elements come into play, and then that's more upstream, that's more strategic, right? But let's say the stars align, the regulations are clear, the policies have been updated, and the leadership accepted the risks, right? Then it trickles down to execution and know-how, right? It goes back to what I said earlier. It's education, persuasion, and execution, right? Do the people who are in positions, people who own the P&L, the profit and loss statements, do they understand it? Do they understand what crypto assets are, what digital assets are, and how it's gonna decentralize their business models, right? They have that understanding. If it's a yes, then are they convinced that it's going to be the future of their business, right? And the third is, well, do we have the capability and the resource to do that, right? Because, software engineers and data scientists, machine learning, like blockchain engineers are scarce commodities, right? Scarce resource. So now you face that battle with, other companies who are also looking at blockchain developers. So all these problems from top to bottom, right? From the regulation to risk and reward, to policies, to risk appetite, to vision, education, persuasion, execution, all those have to align, right? And so that's why, a bank like JP Morgan, for example, their CEO is publicly against crypto, right? And yet they have crypto trading platform, right? And that really baffles.
I was thinking of the same example.
Yeah, and what went, like, that didn't happen overnight. You got leaders in their senior leadership who are visionary, who would, I'm gonna put my career on the line, I'm gonna put my pension on the line. I think this is the future. You need people like that, and so far, that's also a function of culture and incentive structure in a bank, which may or may not reward forward thinking like that. So,
yeah. I absolutely agree. I think the tone from the top, and I think it's responsibility for everyone, in the industry and in the space, to educate our leadership and make sure that they know what the future is. I share, like, very quickly our example of when we got the treasury for KPMG. We literally had our leadership transacting on hardware wallets. We had them interact with crypto for them to experience what it is and why do we all so strongly believe in it. So we had to go through that phase in order to educate them, and that's why we got the buy-in. And since then, it's just been a roadmap for us to continue to do more in the space. Farhan, any thoughts on your end as to, based on your experience and especially with CipherTrace, what sort of challenges have you been able to address for some of the banks, let's say most likely in North American region? What are some of those challenges that you've been able to address that the banks need in order to be able to service any of the B2B crypto asset services?
Where we focus our efforts is in the KYC AML space in terms of CipherTrace. For a bank very often doesn't know how much they're exposed to crypto as depositors move their money, whether through various channels, ACH cards, wires. Certainly people know the headline names like crypto.com or Coinbase or Binance, but there's a long chain of other tail, if you will, of other crypto VASPs out there. And so having developed a very deep database of who these entities are, we give the bank the ability then to identify who is moving money inside their system and where it's going, so that they can quantify. We've had banks all across North America that say, we have a rule against crypto, and come to find that they actually do have a lot of money that's moving into crypto companies. And some of these companies are low risk, and some of them have a higher risk. And so it's incumbent upon a bank. In fact, I would argue it's their responsibility to proactively know that. And so in that frame, we've also taken a step further, and we've combined Mastercard's assets with CipherTrace to give banks a portal which they can go to and where they can see both in numerical form and in visualization where that money is going and who is it going to. The threat for a bank is twofold. First, there are deposits leaving the bank that very often never come back. And so a bank has to, once again, taking Gabriel's model about risk and reward, decide how should they or could they keep this money that's interested in crypto within their own four walls. So it doesn't escape the bank in terms of their balance sheet. The second threat I think a bank faces is that the DeFi world, the decentralized finance world, is creating products that are going to be competing with banks, whether they're lending products or mortgage products or interest-bearing certificates, as it's called in the traditional banking world, but sort of yield farming as it's called in the DeFi world, right? These are competitive products that are attracting consumers' money. So banks have to deal with both the threat of people moving away as well as the industry creating new products. CipherTrace, of course, helps banks, as I mentioned before, establish that level of trust and security so they can start to make these decisions in a more nuanced way and seize the opportunity that crypto is presenting rather than shying away from it.
Yep, I absolutely agree. I think whereas it can be looked at from one perspective that there's money leaving the bank from the retail side, but there are opportunities for the bank to bring some, if not most of that money back by starting to cater to the various VASPs out there, because they all are well-funded businesses. Most of them are. It is a business that has proven itself over the last couple of years. As long as the industry also recognizes what the risks are, they are taking steps to mitigate those risks, put in additional risk and control matrices and procedures in place to address those risks. I think
I would say one more thing, which is that obviously there is, just like any other type of investment vehicle or money movement, there is fraud involved, unfortunately, right? There is first-party fraud. Sometimes customers have buyer's remorse that they bought a coin and the value's gone down, and now they say, well, I shouldn't have bought it, so I'm going to claim that I didn't buy it, right? There, we see that happen. Then we see, people having account takeovers and, money moving out of the bank account to the exchange and then sort of disappearing. So we also have to address that area and provide tools and resources that banks and customers and VASPs can use. We've seen regulators like the Financial Action Task Force in recent years come out with their travel rule that better identifies receivers and senders of crypto. Certainly different jurisdictions are implementing it in different ways, but I think that will normalize over time. And that's a very powerful tool, I think, for banks as well as for industry players, because even though the movement of crypto will become somewhat de-anonymized, it then will also help reduce fraud, because now a bank will be able to see the depositor moved money to a crypto exchange. And if the size of the ticket is high enough, then the subsequent money movement will also be traced. And certainly, CipherTrace and Mastercard are playing and have products in that area as well in terms of our traveler tool to help exchanges and banks comply with those regulations.
Yeah, I absolutely agree. And I think, when we talk about the compliance and controls, again, bringing it back to just, being able to offer B2B services for the banks, what additional controls or compliance requirements do the banks or other financial services firms, do you think, expect from these VASPs to have in place so that they're comfortable offering any banking services to the various VASPs. I think one of the big issues that we are seeing in the industry is all the response that VASPs are getting from the various banks is we can't provide services to you. It's not aligned with our risk policies. But for me, and the industry, it's tell us what risks are you concerned about. Help us help you, because we also want to understand, we want to mitigate those risks so that we can become a client of yours. So in your opinion, let's start with maybe Nick and then Gabrielle. What do you think? What are those additional compliance control requirements that the VASPs need to think about in order to make sure that they're able to become a client?
Right. If I go back maybe just 3 or 4 years in the industry, I think a very small percentage of companies in the digital asset space would have taken AML as seriously as they do right now. So, we have the very highest tier of client that we will bring on board is a client or a company in the digital asset space that virtually has the same practices and risk management framework that we do regarding AML. So using, if not the same vendors, using similar vendors to do similar jobs. So the easiest client for us to onboard will be a client that has taken that seriously, some of which, remember, have legacies behind them. So you have some companies now that have told us, hey, as of such and such date 3 years ago, we have handled everything in a perfectly compliant AML way. But we also have 7 years of operations before that where the management decided that maybe they weren't going to devote as much to the AML compliance. So I think going forward, that's all going to iron itself out, because I think every player in the industry is going to realize that we live in an AML world. But if you're asking the question, how can they put themselves in the very best position to get banking services and to get bank accounts? I think it's just a legitimate devotion with not only resources and people in that area, but good risk management frameworks and compliance policies, as well as the ability to show us that they're using best of breed service providers to be able to handle some of the work that needs to be done. Those would be the critical components for us.
Yeah, I'd second that as well. AML in the crypto world is a crucial ingredient for banks to participate in the space. I'd say, at least in our journey in the bank, the first hurdle was AML. The next one would be cyber, understanding the technology. And the third one would be risk management, updating the policies based on the understanding of the technology. AML teams in general are mostly focused on the traditional way of banking, right? That equity, fixed income, credit cards, deposits, you name it. That's their cup of tea. And again, it goes back to what's the tone from the top, right? What's the regulation saying? Is the leadership for it? And is there strategic priority and resourcing behind the initiative to invest on it, right? And that's where AMLs take cue from, because AML teams usually in a banking setup is a second line of defense, and they normally take direction from what the business will ask them to do. So when that signal, so the signal's delayed, to the next point, this is something that the banking industry should have had 4 years ago. But, we're just starting to get that right now, right? We've seen bull runs and bears, happen periodically. And I think the banking industry is starting to understand that that's the cycle, that's the business, right? It's not going to be 5-10 years before you get some returns, or you see how the market's going to go. It's like going to fluctuate all the time, right? And I think that has taken a while for banks to understand, right? And even like I'll share a personal anecdote. Even in my case, I was in the product groups, right? I was heading product groups for crypto assets and digital assets. We saw a gap in AML. Like, we were moving fast on the business side, but on the AML side, we're not following as closely as we could, right? And it's and there's no one else who would be willing to do that. And I said, well, if there's the gap there, then why don't I just help out in that area? So I kind of have to take that jump and leap of faith that, hey, it's not just the business, but everyone else has to follow that journey. And so that's how banks have to innovate, is taking that risk. So
yeah, no, that's a great point, Gabriel. So I mean, you mentioned regulatory clarity as well, specifically for the Canadian environment. we know any virtual asset service provider, they have to register as MSBs with FINTRAC, and they have AML transaction, monitoring and reporting requirement as part of that. Do you think there is sufficient regulatory clarity in the Canadian environment today for banks to be able to start offering banking services to WASPs? And if not, what is that gray area?
Okay, I can jump in there as well. Yeah, speaking especially from a bank like Royal Bank, we wouldn't be looking into this area without any regulatory clarity, right? That's just the risk appetite of the bank. I'd say, relatively speaking, relative to the states, I think that the Ontario laws are pretty clear on how VASPs are to be regulated. We looked at an extent. I think there was a formal ruling that was released in April last year from the OSFI on how VASPs are to be treated, whether they're a trading platform or they're a marketplace. I thought it was fairly straightforward, but again, we're talking Canada in isolation, but crypto is global, right? It's not just one area, especially because it's a decentralized network, spans across the globe. And so regulations can't be viewed in a vacuum. And so that regulations are co-evolving with how other countries are also evolving its laws. So I'd say the likes of UK and Canada are pretty clear on how they rule their VASP, but the regulation that everyone's watching out for is the states. That's we're waiting on the ruling on the SEC. Or how are we going to deal with stable coins that are unstable, right? How are we going to deal with when the ecosystem collapses because the stable coin collapses, right? So those are areas that the regulators within Canada as well are closely watching, right? And they're also governing regulators that are beyond a specific country, like the FATF that Farhan mentioned. Also, local regulators take cue with how regulations are evolving across countries. So I'd say, again, to sum it up, I think the Canadian laws are pretty clear with it, but it's not static. It's going to change based on how regulations are evolving in other countries. So, yeah.
Yeah, no, I'd like to believe, the Canadian environment, regulatory environment, we're pretty far ahead in the US when it comes to ETFs. So I would like to believe that we would go ahead of US in the banking services as well, but let's see. So I think we have sufficient time for a couple of questions. So I'm gonna start with the first question from Vibhor. The question is, since there is no underlying to crypto, if the banks adopt crypto transactions, how are consumers hedged in the event of fraudulent transactions? And are there any crypto insurance companies covering such risks?
I think if we think of the asset class, I think it's very much caveat emptor, right? You beware of the risk. I mean, just think about the ethos of crypto at the very beginning was it's decentralized, it's anonymous, and therefore there's risk inherent in that as well. There's no middleman, right? So unlike perhaps traditional financial transactions where there's a safety net under you, whether it's that your deposits are guaranteed or otherwise, in this ultimate sort of freewheeling system, there is no safety net. And so there is no protection against fraud. Now, having said that, there are very few people that would want to, well, there are many people that want to sort of play in that world, but there are also a lot of people who don't, right? They want some degree of security and protection against fraud. And therefore we've had an evolution in the last 10 years of different types of products. I'm not going to endorse any of them, but let's just take the notion of a stable coin, for example, right? A sort of asset-backed stable coin, on the surface at least, provided by a reputable company, seems to be more protected against fraud than, let's say, buying a coin that someone created in their basement. And so I think it's incumbent upon the consumer, first of all, to do their own research. And then to the extent that banks are adopting some of these companies and bringing their services to the customer, banks and other have to also do their due diligence as well, in terms of providing legitimate types of crypto vehicles to their customer base.
Okay,
Go for it, Gabriel.
I'll chime in a bit here. So I was reading the Q&A chat. So to Farhan's point, yes, buyers beware. So normally I think the likes of JP Morgan they did offer a distribution platform, but you know, your reward is commensurate to the risks that you take. So not all banks will have an insurance program underneath it. They would just merely facilitate the access to the asset class, right? And that's just because the nature of the asset class is too much of a risk to bear. There are insurance companies that does insurance. But again, to Farhan's point, if banks were to work with these crypto insurance companies, there's an extensive, and I emphasize the word extensive, due diligence that goes in. It's like we really look at everything, you know, from the founder's track record to the company's regulatory track record to solvency, capital requirements, everything. We look at everything. And again, it all boils down to the bank's risk appetite in working with a third party that's likely only in business for 2 or 3 years. And that's just because the asset class only came in massive adoption in the last 3-4 years, right? So there are not a lot of established crypto insurance companies out there which banks look for when working with a third party. Banks have a very robust due diligence when it comes to third party vendors. So that would be a bit of a challenge as well. So if ever the banks would just be a distributor, and the buyers need to understand that when they invest in this, they absorb the losses.
Yeah.
So, yeah.
That's great. So we have another question. Are there regions or regulatory frameworks that enable banks to lower their risk in adopting Mastercard or other crypto enabling products? Nick, I'm sure you have a lot to say about that.
Yeah, I can tell you one that's very forward thinking when it comes to crypto assets, and that's Bermuda. And I say that with a great deal of pride because, you know, what we see, having a very long career in the banking business here in the States, what we see is, you know, with essentially 3 primary federal regulators that you might have to answer to. And now with some level of upheaval when it comes to how to regulate digital assets, there's not a lot of guidance for banks in terms of how to do some of this stuff. So I can only speak to our jurisdiction, but there are probably others around the world that have been more forward thinking about putting laws on the books and smart regulation in place to allow companies like ours and also the digital asset companies that we will service to set up shop and move forward. It's all about clarity and consistency. So you have to have the bankers and the digital asset companies have to know what the rules are. And they also have to have some sense that those rules aren't going to change the following year. This is no different from any other business in any other regulated environment in any economy, really. And I think that's the forward-thinking jurisdictions are doing that. They're putting laws on the books and regulations on the books and giving people confidence that those are going to be the rules going forward. And that's how you build businesses around that.
One country comes to mind very quickly here, El Salvador. They're so forward-looking to the point that they made their own fiat currency a cryptocurrency. So there are countries like that. I mean, crypto, and the reason why crypto asset is such a popular topic, especially during bull runs, is because it's a gray area. Whether it's good or bad is up to you, right? So it's how you position it, what you think of it. There are leaders of government who thinks it's financially inclusive, financially empowering. There are countries that say, well, this only favors those who understand the asset class and, you know, greatly prejudice those who don't. So again, it cuts both ways. But to answer the question, there are countries. El Salvador comes to mind very quickly.
Amazing. Just to wrap it up, I'm going to ask one last question to all 3 of you. And maybe just give your answers in 30 seconds or less. If you had a magic wand, what do you think will need to happen for mainstream adoption of crypto, whether that be as a means of payment or a store of value, or maybe in Gabriel, your case, for banks to be able to service clients? General banks, no, not just specifically, your bank, but generally.
Okay, I'll start. So I think there are two ways to go about it. Well, actually three. One is once the banks start bleeding clients from DeFi, then they'll take it seriously. And the cracks we're showing during the bull run, it's taken a bit of a hug during the crypto winter. But once banks feel that they're bleeding clients due to DeFi is innovative products, then they will start taking it seriously. Another one would be regulatory clarity. Once the regulators have made their positions clear, because regulators are a bit unsure about this. There's talks about having a gov coin, right? Their own coins that would make banks a shell of what they are, basically distributors, right? But there are also governments that say, let's not disrupt the industry, it's thriving, let's make rules for it, right? So once that's clear, I think the banks will start adopting very carefully. And lastly, once they see their competitors, and I say not just competitors, other banks, but competitors like tech companies offering crypto products that take away from their core businesses, then they'll start adopting it faster, right? So remember what I mentioned earlier, the regulation, the leadership buy-in, and the policy update, and the and businesses investing on this. All those stars will align. Once you get competitive pressure, customer pressure, and regulatory pressure, and all of those combined together is enough for banks to adopt it. So, yep.
Well said. Go for it, Nick.
So go ahead.
Oh, sorry.
Great. Let me just chime in for 30 seconds. I think my magic wand will be, and I think it's a matter of time, for widespread adoption in the banking business, but also in the economy in general. It's when the entire stream of commerce is accepting of digital assets. So for instance, a bank like ours is going to put a dollar-denominated, fully reserved, fully redeemable stablecoin in the marketplace. And that's going to be good for one or two steps in the payment stream, and in terms of the stream of commerce between producers and employees and tax receipts and getting cash to pay things like mortgages and car loans and everything else like that. So I think we're in the first innings of that. I think I envision an entire stream of commerce, that entire loop of money flow that currently exists in the fiat world that doesn't necessarily exist right now in the digital world. So I don't think I'm waving my magic wand to say that that's something we'd like to produce, but I do think that's going to happen in the next 5, 10, 15, 20 years, where digital assets, and I'm speaking about stable coins right now, and in a new form of stable coins, are going to be used in the entire stream of commerce. And I think that's really what's going to change.
Got it. I would give it lesser number of years, but I agree with you. I think that's what will need to happen. Farhan, sorry, go for it.
No problem. I'm going to build upon what Nick said. The majority of the time when we talk about crypto and blockchain, we're talking about speculative assets. But I really think that the power of what we're going to see in this area is going to come about when we are using these tokens, coins, or whatever you want to call it, for day-to-day payments. But the difference between these coins and the money that we see today that is digitized is that this needs to become smart money. And what I mean by that is that these tokens, coins, or whatever you want to call them that are going to be used will have conditions built into them, rules built into them, such that they can be withdrawn or deposited according to those rules, right? The smart contracts that we talked about in sort of Ethereum world, right? Those really haven't come into being in terms of the applicability into the consumer world or in terms of B2B payments. When they do start happening, I think that's when people will make the shift from crypto as a speculative asset to crypto being a day-to-day utility that actually brings value to their daily lives.
Love it, love it. All right, we're pretty much at time. Well, this was fantastic. Thank you so much, Farhan, Mike, and Gabriel for those wonderful insights and your inputs. I hope the audience enjoyed it as well and found it insightful. This is just part of our initiative to continue to move the ecosystem forward and see how the Canadian crypto space can flourish. So I'm going to hand it over to Kolea for some of the closing remarks. But thank you, everyone.
Awesome.
Thank you.
Well, thank you so much for joining us on our roundtable today. Our FinTech committee does provide these on a quarterly basis. So I think that July, we should have another one coming up in October. If you sign up for our newsletter on canadablockchain.ca or check out our magazine, follow us on LinkedIn, you'll stay up to date on any of the events that we post. Thank you guys so much for being here today.
Thanks, everyone.
Thank you.
Bye.
We're good.